So you are a buy-to-let investor and you've got some cash in the bank and you're wondering whether to go out and buy an investment property with a mortgage or buy it outright for cash. Well, in this video, I'm going to share with you my thoughts on how you make that choice. And particularly for where we are in the economy right now, making the wrong choice is going to cause serious damage to your long-term wealth. Stay tuned for more. Hi, I'm Ranjan Bhattacharya. I've been investing and developing properties for the last 30 years. You may have seen me on the hit Sky TV show Property Elevator or attended one of our property networking events in central London. If you're new to this channel, you've got to subscribe and hit that bell icon because we put out new content every week, all dedicated to keeping you on top of your property investing game. And this is a question I get asked a lot by those lucky enough to have a little bit of cash in the bank. So let's say you've got 200k in the bank, 200 grand in the bank, and you're wondering, well, I want to buy a buy-to-let property. Should I actually buy it outright or should I buy it with a buy-to-let mortgage? Of course, if you own it outright, you're not answerable to anybody. I mean, ultimately, of course, when you buy a property with a mortgage, it is a loan. It is a loan, and that loan has to be paid back. And there are terms and conditions under which they lend you the money, and there are things you have to comply with, and blah, blah, blah. There are many reasons why some people want a low risk, low hassle kind of life, and they're parking their cash rather than keeping it in the bank, parking it in an investment property. And I get that. But there are times when that is not really going to be a great approach for you. Now, we have a massive problem right now, and I've talked about this in previous videos. I've talked about how the government has printed a huge amount of extra currency and shoved it into the economy. We saw in April 2021, inflation in the UK, the rate of inflation rose by 1.5%. That's a doubling from 0.7% in the month of March. And of course, you don't need to be a rocket scientist to figure out this is just something that happens when you print a load of money. And you know what? The rate of inflation will actually rise as we come out of lockdown. Why is that? Well, we've been locked down. So as a result of that, people haven't been able to go out and spend the extra currency that has been printed and shoved in their bank accounts. Once lockdown is over, people will be able to go out and spend more easily. Now, what that will affect is the velocity of money in the economy. That's the rate at which money circulates in the economy, which will also add more sort of inflationary pressures. Now, I'm not really old enough to remember the rampant inflation that existed in the early 1970s, but anyone of that generation will know that the massive detrimental effect that rampant inflation had on people's wealth. We'll get back to the video in just a moment, but what I wanted to really tell you about was what is the most exciting opportunity in property right now, and that is repurposing defunct commercial buildings to residential use. Now, most people don't really know where to start, what to look for, and how to exploit these opportunities, and that's why I've prepared 90 minutes of free training for you to get you started on this wonderful journey. You can register for this free training at property-workshop.com. Join me on that free training, and I'll leave you to enjoy the rest of the video. So here's the thing. I think inflation is going to rise even more over the next couple of years. And if you've got money in the bank, it's basically losing value simply by just having it in the bank. And that's, of course, because you're not earning enough interest on it to compensate you for the rate of inflation at which your funds are being eroded. So what can you do with it? You can put your capital into something that will act as a hedge against inflation. But what about this as an idea? Instead of just hedging against inflation and protecting your capital, you actually do better. You actually use inflation as a springboard to be in a better position in a few years than you are today, even accounting for inflation. The way you do that is by harnessing the power of leverage. Now let me explain on the board with a little example. So if you're liking this, by the way, make sure you smash that like button. It means more property investors will get to see this video. And if you haven't already done so, subscribe and hit the bell icon. You'll get notified as soon as we release a new video. So let's show you exactly what I mean. You're a cash-rich investor and you're lucky enough to have 200k in your bank account. Now, over the last 10 years, since 2010, UK property prices have gone up by around 5% per annum. So since 2010, this is just fact, it's gone up by about 5% per annum. So let's just assume for this scenario that this 5% rate of house price growth will continue over the next 5 years. Now, I don't think it will. I'll come on to that in a mo. But for this example, let's just say it will. So you've got your 200k, and what you're going to do is you're going to buy one house up front for 200k cash. Now, with 5% annual house price growth, at the end of 5 years, that property will be worth £268,000. So over 5 years, of course, you've made 68 grand, and that's a return of about 34%. Now, of course, you do have to factor in inflation. Remember, this 5% that we're assuming is over the period 2010 to 2020, when inflation was really low. So after inflation, you have still made something if you invested from 2010 to 2020. Now, of course, judging by the recent inflation figures and what we're projecting going forward, the inflation rate is going to be far higher over the next few years than it has been over the last 5-10 years. So it's all very well making 5% per year, but how much you're actually making once you've factored in the inflation anyway. So that's why if you're investing right now, putting all your cash into a property like this is not particularly sensible, because I believe you won't make enough to counteract the effects of inflation. The way to not just hedge against inflation, but to actually beat it and come out on trumps is to use the power of leverage. Leverage, of course, is when you take out a buy-to-let mortgage, because with your 200k, you can use that as deposits so that you can raise buy-to-let mortgages on property purchases. So typically you need a 25% mortgage to purchase a buy-to-let property. That means you put in 25%, the bank gives you 75%. There are even 80% buy-to-let mortgage products out there, but that's the subject for a different video. So with your 200k capital, what you can do is you can actually buy 4 houses, because you can put 25k as a deposit into each of the properties. Now, and this is where you can actually beat inflation, because of course your total portfolio value is 800k. You're using your 200k worth of capital you got in the bank to own and control and benefit from an 800k portfolio. So of course 200k of that money is yours, and 600k is provided by the bank. The whole property value will rise with inflation, but the debt remains the same. Your debt is frozen in time at the absolute value at the time you took the debt out. So if there's a period of inflation over the next 5 years, which there will be, the real value of that debt will actually decrease. So what will this leveraged portfolio of 4 properties look like in 5 years, assuming just 5% per annum inflation? Well, those 4 properties will increase in value to £1,072,000 something or other pound, which is an increase of 136%, which is of course a massive extra turbo boost to your returns than simply putting the 200k into one property and buying it cash. Now, with these figures, we've assumed 5% inflation, and that was based on the past 10 years. I think it's going to be pretty much close on to 8 or even 9% year-on-year inflation when we look at what's going to happen over the next 5 years. So the power of leverage is absolutely key. Now, these simple examples just assume you're doing vanilla buy-to-let. You're buying properties, not adding any value, and pretty much being good to go. When you combine the power of leverage with strategies like BRRRR, which I'm not going to go into here. I'm just going to refer you to a video and put a link in the description below. You further turbocharge these returns exponentially. Now, I hope those insights have been useful. Make sure you smash that like button, and if you haven't already done so, subscribe to this channel. Now, whether you've got cash in the bank or you haven't got cash in the bank, a period of inflation is not bad. It's not good news for people that don't control assets, because it will seriously cause long-term damage to your long-term wealth prospects. So one thing I've got for you is a webinar that I'm doing. It's a free 90-minute masterclass, and I'm going to lay out for you the best way I see of hedging, not just hedging against inflation, the ravages of effects of inflation, but also beating it and coming up on trumps, on top over the next few years. If you want to register for that, the link is at the bottom of the screen and in the description below. See you on the webinar, and see you guys in the next video.